We have a break of structure here, which generates an order block. It could be anything in here, but essentially what we're looking for is that that candle that pushes price to break structure, which to me is this one right here, right? This candle leaves imbalance along the way, or inefficiency, where this candle does not quite meet this one. It did attempt to fill the imbalance, but it didn't quite fill it all. So to me, there's still an imbalance here. There's still orders, and we have the daily here. So as price was coming down, I was thinking that price would tap into this and react in some way. It did react very well, and I've been looking for longs in here since. And I'm confident, or I have confidence anyways, that price wants to continue at least through these candles here, based on the inefficiencies that were left along the way. We can see that there's inefficiency here, there's inefficiency here, and there's inefficiency here, which has now been filled. All right, so this is my thought process on going long, that we've got a good reaction off the daily order block, a break of structure, and imbalance to go with it, right? So price is now filling this imbalance as it goes up. Look at the 4 hour, right? Now we have a couple areas of interest. We do have this 4 hour order block here, where it left structure behind and left a bit of imbalance along the way. All right. So for me, this area is something to watch out for when price gets into it, right? But we're not quite there yet. We're pretty far away, so I'm not too worried about this. This is just on the back burner for now. Another level of interest I have is right here. This again, 4 hour order block, where price then breaks lows and creates a little imbalance along the way. This imbalance is a bit subjective in the sense that this candle comes here to this level and this candle comes up to this level. But if we're just talking from this candle to this candle, there's imbalance in between. For me, I like to think the imbalance still exists and price will gravitate to this level and potentially react off and fall to the downside or continue upwards. I'm not sure. But with that being said, I did make an error in my analysis at one point, and I drew a 4 hour order block at this level, which is false. This is not a 4 hour order block. What do we need for an order block to be created? The basics, again, we need a break of structure, right? So if this candle came down here, but this one was actually lower, it wicked lower than this one. So it didn't break any structure. It's not an order block, right? But I drew it anyways, so I'm going to continue my analysis and my breakdown as if that hadn't changed, right? So price is moving its way up to it. I'm in this area now looking for longs because I do expect price to come into this order block. Again, it's not an order block. I thought it was. My trade idea was that it was an order block, and I looked for refined zones within it to target. And I planned that out, and I traded my plan. And that's the whole concept, so that's all that matters at this point. So we'll go down to the 1 hour. Right? And I refined down to this 1 hour order block, which is very much an order block. As we can see, it's denoted by a break of structure. And it left imbalance along the way, right? Giving this order block a little bit better of a chance of being hit. All right, so at this level, I'm looking for longs. I'm looking for longs to trade into this area here. Right. So if we look at price, right, there's a lot of messy price action to the downside here. Price slowing down as it approaches this daily order block. We get a severe reaction here. we're getting breaks to the upside, right? So still very, very bullish off this daily order block. And we see price starting to navigate into these areas of interest here, right? So we can go ahead and scale down to the 15-minute time frame. Take a look at what we have, right? We do have price creating a series of higher highs, lower lows, right? We know that, right? Higher highs, lower lows, higher highs, higher lows, higher highs, higher lows, right? Right? Still bullish. We have a bit of a retracement. So what we're gonna do, my entry was on the 1 minute based on a little bit of 5-minute structure, and I'll go into that in a second. But I know a lot of people like to trade the 15-minute, and that is perfectly fine. The only reason that I like to trade the 1 minute and the 5-minute is, I don't know, I enjoy it, honestly. And secondly, it refines my stop loss a little bit more, so I can have a little bit more return on my time invested and patience and all that, etc. Everything is based on the higher time frame analysis. I don't just look for structure on smaller time frames. I get a lot of questions about that. You can essentially trade 15-minute structure looking for 1 minute, 5-minute entries, and just scalp and just look for target areas within that smaller range, which I do occasionally, but in this case, this was a little bit different. I was looking for something a little bit more with a higher return, a higher target area, just because of what price is doing on the higher time frames, specifically reacting severely off of the daily order block. With that being said, another thing that I like to look at when I'm entering trades is just what is happening in each session throughout the day. Where are the highs and lows of each session, the London, the New York, and the Asia session. So I have this kind of map, I guess, that I use. It's not an indicator, I guess, but you can find it. It's just called Asian Session Range. What it does is it highlights the highs and lows of each session, so you can kind of see where price was throughout each session. In this case, I did use this based on a trading idea. My trading idea on the New York low, which we'll get into here in just a second. So I'm going to play this forward. Right. So as price started to New York closed here, and we got our low here, right? Created a pretty strong order block. It also created equal highs up here. So let's draw this in. We have equal highs, which means that there's liquidity above it, right? So with that being said, when I was looking at this trade, it was closer to 10 or 11, right? So right now we're looking at 5:30 p.m. I'm on East Coast US time. Now, because price formed equal highs here, I'm confident that price will eventually or shortly after this move to this upside and clear this liquidity out. All right, we can think of it like this, right? There's liquidity above it. We don't have to target above it, but we can say that there's liquidity above it. Excuse me. All right, there's liquidity above this area. And I like to leave notes like this because when I switch between time frames, when I switch between pairs, I want to know, what to expect. All right, I don't want to have to reanalyze every time I look at the pair, right? It's good to take notes. A lot of times I'll sit here and I'll take a series of notes saying, bullish bias, looking for longs on the 5-minute structure, whatever. And I'll just leave a little note right here. So every time I look through it, I can reference it very quickly, So let's play price through, right? We get a sweep of these highs. So people who are trading support and resistance, right? They see one tap, two taps. They're hoping the third tap will hold, right? We know this because this is what retail traders do. They trade based on patterns that essentially, I believe anyways, that the market fabricates to liquidate and trap retail traders. You can believe whatever you want, however you want to. It doesn't matter as long as you have something to kind of hold on to help your understanding of what price is doing, right? So let's just say price is just an algorithm, right? It's just robot trading. You know, the fact of the matter is it logically probable that large banks, institutions, Roland, whoever's got all the big money, is it reasonable for them to have a coordinated effort throughout every session to hold certain levels of support and resistance, or trend lines for that matter? You know, if you draw a trend line and you see that price is holding to it exactly as such, why do you think that is? You know, you got to think about it in logically. It's not holding because retail traders are selling and buying at these zones and it's making price hold there. It's manipulated, it's fabricated. These are the things that people look for when they're trading, and they're not entirely sure what they're doing. They think they know what they're doing, but at the end of the day, they might get thrown a bone here and there. But the idea is, when these zones are created, equal highs, equal lows, people who are trading things like support and resistance or trend lines, they get in, they say, okay, we got a tap here, sweet. We got another tap here. Okay, we're going to look for a third tap here. We're going to place our stop losses here. If they haven't already gotten short, right? There's a severe reaction in this area. They might get on short right here. Put their stop losses above, right? So then price does what? Price then sweeps above. And it takes these highs out. It grabs the liquidity. And then what happens? Breakout traders who are going long take this area and they say, okay, it's time to go long. We got a big, strong, bullish candle. It closed full. You know, they might have orders here to go long. They might enter manually. And what are they doing? They're placing stops below this level. Oh, sorry, not breaker structure. Right? We have liquidity right below this area. Right? Right? It's not a clean equal lows, but it is an equal lows nonetheless, right? We have a price bounce into this area, a reaction, comes right back into it, and then it continues to break these highs, right? So people are thinking, okay, here we go, right? We failed on the shorts. It's going long. It broke out. We're going long. They place all their stops right here, right? So first move, grab liquidity from the top. Second move, grab liquidity from here. Now, because we know how an order block is created, institutional funded candles, right? We know that large orders are placed in areas like this where it generates imbalance, breaks of structures, and all that goodness. Now, clearly, this could be denoted as our break of structure from this area here. Again, my trade idea was based on the 1 minute and 5 minutes. So there's breaks of structure throughout here, which I will show you in a little bit of time. Right. So let's go down to the 5 and take a look at what we see. Right. Right. Again, this is our low. I don't need this on anymore. We get the idea, right? New York low, just a session low, not a huge deal. The core concepts are, we have an order block based on breaks of structure. All right, we got a break of structure. We do have another break of structure here, right? Again, it's all based on a little bit higher time frame, but essentially this is how it played out, right? So we have this order block here. This is the 5-minute order block. We have a liquidity zone above this area here, which has been swept. People who are breakout traders are going long here, right? And who's to say it might continue upward? For me, this was clear manipulation, and it's just a matter of understanding what price is doing, right? It created a high, right? Overall, my target is up here, right? But there's no entry for us, right? These order blocks in here, there's slight substructure breaks, right? But these aren't, to me, they're not true order blocks. They don't break major structure. They don't leave imbalance, right? We can see on the 15 what it looks like. All right, this isn't clear order block stuff, right? We get a break, retrace. Let's see what happens next, right? Price then continues to come to the upside, which gives confirmation to the people who are long. And if they haven't gone long yet, they start to go long. They place their stops down here. Price then starts to rip away. So 1, grab liquidity up here. 2, looking for liquidity down here. 3, order block right here. When you have liquidity zones right after your order block, this gives this order block a little bit more confluence. It gives it a higher probability that price will react to this zone, right? Price then reacts to this, which again probably gives people a little bit more confidence that it still might go long. And then what does price do? It creates another, let's go back to the 5. It creates another double bottom, right? A lot of people like double bottoms in the retails trade, right? This might be support. This might be a double bottom. We know it as equal lows, where liquidity sits below, right? So in all of this, I have not entered any trade. There's been a lot of moves. There's a lot of FOMO. There's a lot of stuff going on here, right? We got a break structure to the upside. We got an order block created here. This is the New York low. We got liquidity. Liquidity's already been taken out here. So next thing for us to do is to sweep these liquidity lows, tap into our order block, and then go, right? Now, I did enter my order block on the 1 minute time frame, so I'm going to place that in there now so we can just see. Obviously, you could have traded the, oops. You could have traded the 5 minute and been totally fine. Oh, sorry, this is the 1 minute. Right. Let's kind of clean this up a little bit, right? Again, we are still bullish, looking for longs, right? We're racking off the daily order block. We are targeting this area here, right? I did find a 3 minute order block in this zone that I targeted based on the idea that there was order blocks created, breaking structure, and lots of inefficiency. Didn't have to be this, but to me this was a very obvious level to target. We can look at this. We can say, right, price swept the structure high, came to the downside, right? The move that broke structure ended up being this here. This was a break of structure. So that means that this candle, refine it down to this one. right? It left inefficiency, right? You could say that this is one as well. Right. There's a bit of structure here that broke down. But for me, I did choose this one. I think both would have worked fine. Ultimately, it did reach the top one. Sorry, that's not a clear explanation, but we do have a bit of liquidity down here as well. Not that it matters, it's already filled, it was swept out. So anyways, yeah, so I chose this based on the fact that it broke structure and it left inefficiency and it was towards the higher side of the order block within the 1 hour, right? This 4 hour order block again was false. So we have this order block here, right? And this kind of is my ideal setup. This is my high probability setup. Now there happens to be 2 liquidity zones, which is double probability for me. I do prefer that there is at least 1 liquidity zone within structure. What I'm looking for when I trade a setup like this, it could be on the, let's go to the 5 minute. Right, we have our 1 hour order block set right here. At this point, I'm already asleep, but I set it. I was confident that price would run into it. We have liquidity taken out here. We have liquidity zones here and here. We have an order block down here, break of structures, and a bit of inefficiency on the 15-minute going upward, right? So what I'm looking for at this point is I want price to start breaking these structures, right? If price breaks these structures here, it grabs this liquidity and it taps into this order block, there's 2 ways we trade it, right? Risk entry or confirmation entry, right? In this case, I set this order before I went to sleep. It was a risk entry. My scaling was a confirmation entry, so we'll kind of go over those in just a second here, right? So price then does what? Price goes up, rips through, grabs this liquidity, gives a bit of a reaction as it pulls that liquidity. It continues to the downside, it rips through this liquidity here, and then it reacts to a bit of inefficiency along the way. Price then continues to sweep these highs, right? People who think it's slowed down, it's going long. Again, this is just more liquidity, right? People who are going short at this area based on this momentum put their stop losses above this level. Price then sweeps above it right here, right? Takes out this liquidity. We know that our order block that we're looking for again is below these liquidity zones, right? So at this point, people who went short here got stopped out. People who are trading the breakout to go long here are about to get stopped out because they put their stops below here, right? This is how you have to think about it when you're trading it, right? So price then does what we'd like it to do. Oh, sorry, I forgot to place my order. When I placed my order, it was a 2.5 pip stop loss. 2.5, right? Initially, I was targeting these highs. I wanted to target this, but because I figured I'd be asleep, I didn't know if it would reach that high. I didn't want to essentially miss out on the profit if it decided to turn against me. And of course, because I'm sleeping, I can't set it to break even, right? And I'm not going to wake up and check it every time. I just not going to do that. I value my sleep too much. So I take profits at these highs in this range here. I think it ended up being at the top because I'm greedy. And then price did what? Price then tapped right into the 1 minute order block. It did not take me out, thankfully. And then we got a pretty strong reaction to the upside. Price halted at this level here. People took profits. I was asleep. This was 2 o'clock in the morning. Price then continued to break the structure high. Now, if I was awake, once price hit this level here, I would have set my trade to break even. But I was asleep. I woke up around 5 to trade the overlap, London, New York overlap, or at least prepare for it. 5 o'clock was right around here. It's coming up. So by the time that I woke up, all the profit was essentially gone. Currently, this ran to about 12 R, right? When I woke up, it was 5 o'clock. Profit was basically down here. I set my order to break even right around this level. This is now 510. I set my order to break even here because I said, well, most of my profit's gone. If it's going to do anything, then I'll give it a chance to do it. That was my thought process behind it. I set it to break even and I just let it do its thing. I wasn't expecting much. I honestly thought price was going to break through the low side of here, grab liquidity from these lows. But I did give it a chance and it did turn around for me. Now I do need to go down to the 1 minute so you can see where my scaling was. So what I was looking at here was price. I'm still targeting this area up here, right? My 3 minute order block that got refined from my 4 hour false order block to my 1 hour, and then to my 3 minute where there's inefficiency, it breaks the structure, right? So I'm in this trade. At this point, I am still at break even. I was managing it on the 5 minute, right? The 5 minute, I think maybe I locked in profits like right around here, which is 1.5%. Right on this structure. This to me is not really structure. I didn't break the highs, right? This was me just saying, okay, if it's gonna come back, I want to at least get a little bit. So I locked it in. That's what I was thinking while I did this, right? So if we go back to the 1, I saw price it created equal highs here, right? Which we know there's liquidity above. So I was pretty confident that price would come up and break through this level, right? I wasn't sure if it was going to continue upward. Obviously with this bearish momentum here, it didn't look like it wanted to, but I traded the way I like to trade, right? I got a break of structure. I have a liquidity being swept right around here. There is a little liquidity in this area, just like on this flat area, but it's not super prevalent, but it is there, right? So I have my order block, right? Order block, a break of structure, a little bit of liquidity, price is coming through. There's a little bit of imbalance to be filled here, right? So that's what I look for in a trade. I place a scale in. I think I gave this 2.5 as well, possibly 3. I can't remember. But if I get stopped out, then it was 3 because I did not get stopped out. So at this point, right, we've got 1.5 locked in. We have this pending, right? Price then sweeps the lows, messes around a little bit, creates another liquidity zone right here, right? So it gave me a little bit more confidence that price was going to sweep below this into the order block, because that's what price likes to do, right? There's inefficiency, there's liquidity, and there's an order block. Price then comes and it eventually, right here, tags me in. Right, this is based on this order block. This is based on liquidity between my order block and my entry. Oops. Right, and from here we're managing on the 5, and eventually I switch to the 15. Right, so I'm just gonna play it out. Right, price then rips to the upside. Right, clears this structure. At this point, I move my stop loss to this area here, which locks me in at 4R. This one still has I think I moved this to break even. I can't remember. Right. Price then continues to break structure to the upside, right? Creates a little double top here, rips right through it. We lock in profits here. Am I in the 15 yet? No. All right. At this level, we're breaking 5-minute structure. We're breaking 15-minute structure. So I start training the 15-minute structure. Again, my target overall is this 3-minute order block. Right, I'm just gonna play it through. I smashed right into it. Actually, I think eventually it smashed into it. Yes, there it goes. I held it a little bit longer, and there it was. That's how I made my 28R here and another 23R right here. I think this is a little inaccurate. Overall, my overall profit was 49.1 R, right? And this is all based on the idea of, let me go back down, right? Both entries are the same. One was a risk, one was a confirmation entry, right? The idea revolves around liquidity and how it interacts with our order blocks, right? What we want to see is we want to see an order block created by breaking structure, leaving inefficiency. It doesn't have to leave an inefficiency, but it helps, right? And then price continues to make these liquidity zones right here, equal lows, a little bit of structure, and then we see price break these structures and take the liquidity, giving us a little bit higher chance that these order blocks will work out, right? This is my setup. Screenshot it, print it, do whatever you want. This is what I look for when I'm taking my high probability trades. I base it on the higher time frame directions, daily, 4 hour, right? I target 4-hour order blocks. I target 1-hour order blocks. I scale them down to get a little bit more refined. I also look for scale-ins, right? Because it's important. Once your risk is off the table, you scale in. And when you're managing it, you know, depending on where you are compared to your target and where price currently is, you have to figure out how you want to manage it, right? When do you take some profit off the table? Do you let the whole thing run? When do you move to break even? Where's your target? These are all the things that you need to think about when you're entering a trade. When you're entering a trade, you should know where your target area is. You should know generally what your entry is going to look like based on momentum of price. Is it going to be a risk or is it going to be confirmation? When do you scale in? When do you break even? All this stuff. Think about it, plan it out, and then trade it, right? Brad and Phantom have given us the tools to trade these ideas. We have to put it all together and trade it in a way that works for ourselves, right? So hopefully this answers some of the questions about liquidity. I know I kind of rambled a bit. I don't really do these videos often, but I did want to give you guys a little bit of content and something to kind of reference and just look at while we wait for some more content to come out. But again, it was a good day. I did take a few small losses. As we all know, the market's been a bit volatile. But yeah, I hope this clears up some questions, and thanks for watching, and I'll catch you guys.
I just want you to know that I also share trading signals to community for free in the Telegram channel. For example, yesterday, I share the gold signals to community. You see all 3TP getting profit yesterday, and the whole community getting profit by this trade. You can see every day I share trading signals to community, and most of them get profit. And especially, I do not only share the trading signals, but I also share the markup and the reason why I enter the trade. And by this one, everyone in the community can understand the reason, and by that, everybody can improve their trading skill. And to join community for free, you can click on the description of this video and click this link here, and you will be directed to the community and join for free.